During the course of the session, we have our usherers who are standing inside the hall, and we request you to please note down your questions on a piece of paper along with your name and the company name. The usherers will collect it from you during the course of the session, and these questions will be addressed by our speakers towards the end of the session. Well, the second session is titled Reigniting Growth in an Economic Slowdown. What kind of leadership and business strategies are needed to spur growth in these turbulent times? Well, if this is the question, then this is a session that will answer all that and more. Today we are joined with our eminent speaker, Mr. Manu Anand, President, India and South Asia, Mondelez International and Managing Director, Cadbury India. And our moderator for the session is Mr. R. Ramakrishnan, Vice Chairman, Joint Managing Director and Group CEO, Polycab Wise Limited. May I have the audience welcome our moderator and speaker with a huge round of applause, please. And with that, I now request Mr. R. Ramakrishnan to introduce the topic as well as the speaker to the August gathering. Over to you, sir.
Thank you very much. It's a pleasure having Manu with us on this occasion. Manu is a very interesting guy. And sometimes I wonder whether any of us, if given a choice, would have liked to be in his shoes. You want to have fun in life, it's all about chips. It's all about a nice cola. And you want more fun in life, you have kuch meetha ho jaye, and that's Cadbury's. And the best part is it doesn't show. Manu Anand is President, India and South Asia, Mondelez International and Managing Director, Cadbury India Limited. He has taken over the role of leading the growth of Mondelez International in this extremely dynamic and emerging market. Manu is also part of the Asia Pacific leadership team, and he also serves on the Mondelez International Leadership Council. Earlier, he was with PepsiCo for over 19 years and played multiple leadership roles. But what kind of stands out is the fact that the food business, he took it up from just $10 million in PepsiCo to $500 million. And Kurkure and Lay's became household names in India. Manu is a very interesting person, having transformed markets. He built up the foods business in Thailand for PepsiCo, entered the markets in Vietnam, and also innovated tremendously in Indonesia. So not only does he have tremendous India experience, but a wealth of international experience. Manu's from Mayo College, Ajmer, where he has spent 7 years, St. Stephen's College, 75 to 78. He's done his AMP at the Wharton School in 2003. And we go back to the paint industry, where 1983 to 94, he was with ICI Paints, and he was a financial controller when he moved on from ICI Paints. His wife, Rajika, is an education consultant. Son Varun is in Ernst & Young, USA, and Adhiraj is in University of Chicago. We have another small thing in common. Bharat Patel will be happy to know that Manu Anand is a 13 handicap in terms of his golf. But Bharat, where we score over him is the fact that you and I have a few hole-in-ones to our credit. Oh, not you? Sorry, I have 3 of them. So I think going on to this extremely interesting topic of navigating a VUCA world, volatility. Clearly, the nature and speed of change is accelerating tremendously. Uncertainty, there is a clear lack of predictability. And the environment keeps throwing up surprises in every business. Complexity, clearly there is chaos and confusion, particularly in the context of India today. Whether it be the economy, whether it be the government, whether it be competition, or it be the bureaucracy. And ambiguity, the reality is like a chimera. The reality is hazy. Cause and effect relationships are changing continuously. So in this kind of an environment, we could not have someone better than Manu Anand, who's been there and who has done that. Manu, apart from whatever else I have told you, I believe, has a German mindset when it comes to time management. And he also has a sense of humor. So a German mindset and a sense of humor are a contradiction in terms. So over to Manu Anand, and let's see both of that.
Thank you, Ram. Wonderful to be here. You know, when I was first requested to come and talk about VUCA, I said, well, what's new about it? Hasn't that been the case forever? But as I reflected, I said, yeah, it seems a little more volatile than it used to be in the past. And I think the one thing that I really realized is time periods for decision making, and more than that, decision review cycles are really compressing as a result of this. And you've really got to be reviewing, deciding, acting with probably much greater levels of frequency than one used to in the past. And that was the difference I suddenly realized had probably come in over the last few years compared to maybe what it was like in the past. Now, I could think of a number of examples to talk about in VUCA from the food and beverage industry, but I thought I would confine my, I'll give the examples of Mondelez. And what better way than to start by really introducing Mondelez to all of you. We are amongst the largest snack food companies in the world, world leaders in biscuits and chocolate with a strong gum and candy business. And of course in India, the subsidiary is a company probably well known to each and every one of you, and more importantly, a product well known to each and every one of you, which is Cadbury. And I'm sure everyone in this room is a consumer, and if not, I'd love to meet you after this session and make you a consumer, because that's the most important thing in VUCA. But I'm sure you've heard a lot about the current economic scenario. I'm sure you each have your views. I mean, you can't pick up the newspaper every morning without not reading about it and reading something new or something different about it. And so I'm not going to belabor that and talk much. I just want to talk about a couple of lead indicators clearly that we are all seeing. And I think the first clearly is the slowdown in GDP growth. And whichever way you cut it, that does result in the demand slowdown, and we've got to work out how to deal with it. And I think the second that we are all now getting really hampered by is the delays in infrastructure and the delays in taking forward the policy and developmental activities that we would have liked the government to have been moving on. So you've got that on one side. And the other one that has just come out of nowhere in the last 18 months has just been the slide of the rupee, which is beginning to impact inflation, really driving up commodity costs when you're dependent on international commodities. And clearly, you know, it is resulting in higher import costs. And suddenly everybody combine all this and you find everyone is now competing for that shrinking share of the wallet as we try and market to consumers. And therefore, I think what comes out of that is the conventional models, the way we used to do business earlier, needs some tweaking and needs some different ways of looking at how to deal with this. Now, my experience has shown me that there are two bookends on how one can deal with this kind of uncertainty and this kind of slowdown. One, buckle down, cut costs, make sure you reduce any pricing impact on the consumer, cut ANC spends, cut CapEx expense, and wait for the wave to blow over. And that works. It works for quite a few people. But there's the other extreme of the bookend is, look at this as an opportunity and may use this as an opportunity to make selective bets, selective investments, ride this wave, and come out stronger. And frankly, if somebody to ask me which is the right way, there is no right or wrong. It all depends on the situation at that point of time, your outlook to the market, your outlook to the economy, your financial staying power, your competitive strength in the marketplace, the strength of your brands, your products, how developed your categories, a number of factors. And in reality, you'll find companies are doing a bit of both. In some product streams, they're investing aggressively and pushing hard, and in others, they're pulling back. And it's going to be a combination of these two bookends, really, which are the ways that people resort to deal with economic uncertainty. Clearly, this is the standpoint of my company, committed to India, really excited about the market, really excited about the opportunity. And for the obvious reasons, I think we've all seen this, really a changing income pattern, the pyramid is just changing to a diamond, and that will happen. Maybe the economic slowdown will slow it down. It might not happen in the time frames projected currently by current economic projections. It might take a year or two longer. But the fact is that the trend is in the right direction and the trend is not going to reverse. So clearly this is something you have to keep investing for. It's just a question of the time frames and how the time frames move around. The second, I think, is clearly the evolving rural markets. Again, suddenly this year you hear everyone's talking about rural. You read the paper every morning, everyone's talking about rural expansion. And a lot of it is just people have now realized that with the challenges in the economy, that is an area that is growing at a much faster pace, and that is an opportunity that can be tapped in for growth. Take aside these short-term views. From a longer-term perspective, this market is going to grow. This market is going to be less farm-dependent, and this market is going to be a large consumption center. And the sooner all of us recognize it and work towards it, the quicker we'll be able to harness that opportunity. I think this slide, well known to everybody about the young and growing population, and that has an impact on two ways. Firstly, the talent pool as well as the consumer pool. And it's important for us to recognize both of them as we talk through ways through navigating through the uncertainties of VUCA, because both have to be addressed going forward. And well, lastly, I think I've drawn this graph for the chocolate category, but I'm sure you look at this for any category, it's the same story. Low per capita consumptions for India, and once you see the GDP curve, the per capita GPT is growing, how this is going to move, looking at the experiences of other markets. So when you look at these four indicators, clearly it says that slowdown or no slowdown, this continues to be a place to really invest in very solidly. And therefore, I'm going to talk about the other extreme of the bookend that I talked about earlier. How to use this as an opportunity, how to use the slowdown as an opportunity to invest, to grow, to come out bigger, and to come out stronger. And rather than just give gyan, I thought what I'd do is take out an old example of my company and how we did this 3 to 4 years ago, how we dealt with the situation, and what it did for us, and why we are convinced that that model works. When I look back, and please remember, and you're going to have to forgive me, I'm 60 days old in this company, so I'm still learning my way through it, and some of you here probably know more about some of aspects of this than I do. But as I look back, for that period during 2008, 2010, when we did feel a slowdown, I looked at some of the actions that Mondelez had taken at that time, and some of the results, and clearly that was fascinating. It was great to see how this company was able to actually take up category growth and take up their volume growth when GDP growth was going through a smaller slowdown than we are saying here, but definitely a slowdown. And it's really about striving for that balance. Where to reduce costs, where to drive for productivity versus where to invest. And if you get that balance right, then you really create a much brighter tomorrow. And I think that is what this company was able to do during that period. And really in Mondelez, this is the way we believe you can strike that balance. Drive for productivity, focus your portfolio, make select bets, make select investments. Above all, sustain your gross profit margins so that you're able to invest behind the consumption drivers, that you're able to invest behind brands, that you're able to invest behind innovation pillars, and you're able to invest behind CapEx for the long term. So it's really converting this to a cycle of investment by selectively curtailing costs that has worked in the past. Now, I don't need to tell this group how to reduce costs. I'm sure each one of you knows your P&L very, very well, and go through the task of really going to each and every line item in times like this to see what can be curtailed, what can be deferred, what can be deemed as unnecessary. But the whole intent being anything that is not consumer facing, anything that is not adding value to the consumer should be questioned, and ways should be found to operate these costs at a much lower level. And I think if you challenge your teams to do that, you can sometimes be surprised by the productivity they find in the P&L. But as senior leadership, what you really have to do is just open the books, open the doors, and challenge and task people to drive for productivity that we've never seen before. And once that happens, the beauty is it becomes a cultural change. It becomes a new way of looking at costs. It becomes the cost savings are here to stay thereafter. Even as you come out of the downturn, you've become a leaner, meaner company, focused much more on the consumer, and you've cut away all the fat. Now, the risk is always, as growth starts again, you add to some of it, but given the cyclicality of the business, you'll find that again a few years later, you'll end up doing that. So really use this as an opportunity to cut flab. And it's not just about cutting flab in cost, but sometimes it's just about looking at your portfolio. And that portfolio could be around the products, that portfolio could be around your distribution model, that portfolio could be around your manufacturing footprint, and you'll find a long tail there. Stuff that is taking up a lot of time, taking up a lot of resource, but probably not adding that much value to the top line or bottom line. And this is the opportunity to be ruthless. This is the opportunity to go out there and cut and make those hard choices so that really you can price below inflation and give great consumer value. And that's going to be important in VUCA. Make sure consumer value always continues to be great in these times of uncertainty and slowdown. And then, second is invest for the future. Once you manage that, I believe if you're in the investment mode, don't cut back on your consumer spends. In fact, if anything, look for opportunities to invest more, because that is where you'll be able to drive not just your growth, but the category growth. And again, here an example of the period I talked about, where Mondelez India really invested during that period and were able to get very high growth in the years that followed as a result of that. But it's not about just investing across the board. Really sharpen the saw. Make it very focused, very targeted. Strive for marketing ROI. Challenges yourself to do much more and get much more with less. Look at master branding, umbrella branding, and really look at those opportunities to see how, with a certain amount of spend, you can get a much larger spillover and rub off on the rest of the portfolio. Focus on category growth, because that is really going to drive your top line rather than just your brands. Especially if you have a portfolio of brands, focus on the category and you get a much bigger rub off from your spends. And lastly, prioritize. Prioritize between the brand you're investing behind, but also prioritize behind where you're spending. On-air media versus point of buying. I think we've got to remember the importance of point of buying in a time like this. Earlier, a consumer would go out with a fairly large shopping wallet and a broad idea of what he or she wanted to buy. Now, especially when you come to impulse category items, it's suddenly one or two notes chasing a number of options. And at that time, being dominant, being visible, being prominent at that point of buying, with outstanding merchandising, with the right kind of devices and with the right location, makes a really big difference. And clearly there are enough diagnostics and enough tools to be able to help you arrive at what is the right way and what is the right investment and where to get to. But really, at times like this, shift a lot of your investment to the point of buying has been our learnings. And then, this is an opportunity also, if you want to chase that, to actually look at new pillars. I mean, we were able to launch Oreo and Tang in actually difficult times. And we were able to generate some very successful launches during that period, because that was the time the consumer, while they had limited money, they were looking for news, they were looking for new things to spend it on, and anybody who grabbed their attention, their eyeballs, were able to get that share of spend. And we did that very successfully with both Oreo and with Tang during this period. And then lastly, innovation. Continue innovation, in fact, make it very, very targeted innovation. During this period, we launched Silk and Bourneville, targeted at the affluent. We dialed up the investment behind Perk and Shots for the emerging consumers, and then really did work to reignite the core on 5-Star and Dairy Milk. And it's not just about innovation, it's about also very targeted communication. And if this works, I'll try and show you some. This is an ISA meeting, won't be complete without showing a few ads, but let me just see if I can make this work. And I haven't been able to make it work, so let me continue. So, I think while you're doing all this, what then becomes the most critical is taking your stakeholders with you. And getting them convinced that what you're doing is the right thing. And I really focus on three stakeholders: your people, your customers, and your shareholders. And in the case of MNCs like ours, shareholder becomes the head office of the parent company. And creating the expectations for the new reality becomes the most important. And it's possibly easier when you're an Indian company and you're talking to shareholders or principal shareholders in India who are here and living the challenges of the economy. But when you're working for a multinational company and your parent has invested very strongly in the India story, to set the right expectations about what's going to happen during this period and why you need to invest while the top line is slowing, albeit a little slower, it's still strong, but slowing a little bit versus the previous years, is a challenge and is a task that you have to continuously go back to them and repeat that. So the important thing, carry your shareholder with you is the first thing. The second really is your people. When you've got a team that's used to a certain level of growth, remember, they are now facing two things. As your team members, they're facing slower growth and the impact that has on their morale. And equally, as consumers, they're out there facing the challenges of uncertainty and facing all the challenges of VUCA. And you've got to continuously communicate and motivate them to continue to do more, because actually, really what it requires during this time, regardless of all the ideas, regardless of all the strategies, is brilliant execution. And for that, you really need that motivated and charged team to be out there executing the best possible execution in the marketplace. So continue to talk to your people, but then also continue to develop them, continue to invest in their development, can make sure you've ring-fenced them and ensured proper retention, and use it, if anything, as an opportunity for talent acquisition. And then third is the customers. Make sure you're in continuous dialogue with them. You've got a ear to the ground. Senior management is out there regularly in the market, talking to retailers, talking to customers, and truly understanding from them what is happening, because things are changing at a much faster pace than you're normally used to. You can't wait for your consumer lag indicators, which we all like to do typically before we take decisions. You're never going to be able to take decisions based on perfect data. You're going to have to get there, use your intuition, use the discussions that you've had with the retailer. I heard Gopal talking about intuition in the previous session, and that becomes very, very important, intuition and experience. But more important, learn to take decisions with imperfect data. Because by the time you wait for perfect data, the time lag has been too much, and you probably missed an opportunity somewhere along the road. So really, three things I think we've got to, you've got to do to convert this into an opportunity. Optimize your cost. Just go after your cost base to make sure that you're generating enough money to invest behind the key drivers, then sustain those investments. And I talked about some of the investments, but there'll be little longer term investments like CapEx that, again, in times like this, if you sustain, you'll probably find yourself in a much better position coming out of that. And then thirdly, just engage with the shareholders and all the stakeholders and stay committed. So that has been my learning. As I mentioned earlier, there's no right way or wrong way. This was one way to do it. It's been very successful for Mondelez India in the past. There are other ways to manage this, and there's no right or wrong way. I just wanted to share these experiences. Thank you.
Thank you very much, Manu. Really appreciate those remarks. Just to set the ball rolling, Manu, I had one important question to start off with, which is, in a downturn, when it comes to expectations of the parent company, the multinational, for them, markets where you've worked in and the market that you're working in is obviously a very high priority market. How do you manage those expectations? Because quite often they are from markets where growths have always been far slower. So they are looking at India, they are looking at China, they are looking at Asia for significant growths. So how do you manage HO expectations?
Well, clearly a challenge. More often than not, the parent companies have invested in markets like India for growth. And to drive that growth, they've given a disproportionate share of investment to these markets relative to the more developed markets, whether it's on
capex or whether it's just on the amount of support that they put behind brands or the people resources. And I tell you, when you've got to start the dialogue to say growth is slowing down, it doesn't, the understanding doesn't come that quickly, because really on one hand they're hearing about the great India story or the great China story, and on the other hand they are seeing slower numbers coming through. And the only way is just continuous dialogue, showing category data, showing other company data, inviting them to come into your markets, inviting your senior leadership in the market, taking them around, getting to meet the trade, getting them to meet people in other companies till they get the larger picture. But at the same time, you're always walking a fine balance, because you don't want them to lose the excitement and interest that they have in India, because as I said, you want to invest behind the opportunity of the future. So it's telling that balanced story on an ongoing basis is the task. And I think that's a task for the senior leadership to continuously navigate through.
I think there are some question slips on your table, so in case there are any specific questions, feel free and send it across. I think here is a question. This is a question from Roshni. In times of uncertainty with limited resources, what should you focus on? Innovation on core or new products? Mondelez has probably done both with Tang and Silk. Any comments on this?
Well, I think always the nearer in opportunity is innovation on core, because you get a bigger bang for the buck at that point of time. You've already got established products, you've already got established brands, and that certainly gives you the initial results. But eventually, you want to get to new consumers or you want to get to newer occasions. And for that, then you have to innovate on new products. But if I had to prioritize, I'd say first prioritize on the core and then move to the new products, depending on your resources.
That brings me to another question, Manu. You know, in a downturn, probably the time horizon that's available to you, whether it be for decision making or for course correction, gets compressed enormously. How do you deal with that?
Yeah, that is certainly the case in a downturn. And what, I guess that there's a normal procedural piece, more frequent reviews and more frequent looks at what's working and what's not working. But just to build on what I had touched on earlier, it's looking for other indicators, because you'll never get perfect data, or by the time the perfect data has come, the time horizon has already expanded quite a bit, whether it is being in continuous touch with your customers, whether it's finding other methods for quick consumer dipsticks that you've got to take to arrive at decision making. And I think some of the decision making shift from balanced decision making to a little bit of gut and intuition and experience-based decision making at that point of time.
There's a question from Vikram Parekh of SIES College of Management Studies. He asks, for a big MNC company, it's possible to focus on investments in brands or advertising, but for a small or medium-sized company, could you suggest how to focus or invest in a downturn?
Well, I think two parts to it. First, this feeling that a big MNC can invest and has deep pockets. I think we've got to correct that, because even a big MNC has shareholders. And shareholders, I mean, each one of us in this room possibly could be investors or shareholders. We expect returns, whether the company is big or small, we expect our returns. So even a big MNC has to deliver those returns to the shareholders and take sensible P&L decisions during this period. I guess, and if you recollect in the beginning, I mentioned that whether you take the route of investing or whether you take the route of, let's say, consolidating and managing the downturn through cost management and really keeping a very, very balanced and tight P&L control will depend on some of the factors. And certainly,